Welcome to FundForum International here in Copenhagen. I'm Joanna Simpson. Joining me now is Mark McFee, Director of Global Insights at Broadridge.
Thank you.
And 2018 was a challenging year for the European fund industry. How is 2019 shaping up?
The bad news is it's looking a little bit lackluster as well in terms of net flows. We've got the first 4 months of data in so far, and we've only seen around about 15 billion euros come into the industry, and actually a lot of that has been supported by some specific institutional plays in the UK. The good news, on the other hand, is that there is quite a lot of activity behind the scenes, so a lot of rotational flows taking place, particularly out of equities and to an extent mixed assets and into bonds. So that's a real reversal of what we saw in 2018 when bonds were a bit of a pariah, if you like. And this seems to stem from the central banks taking a much more dovish tone again this year. That's given a lot of bond investors more courage to pile back into this space. On the other hand, it could be a bit of a safety-seeking play after the market turbulence we saw at the end of 2018 too.
So what sort of shifts are you seeing in Europe's fund distribution landscape?
Quite a few taking place. I think some of the key ones have been playing out for a little while now and very much related to MiFID II, either pre or post implementation. We're seeing things such as growth in demand from selectors for model portfolios. Sub-advisory agreements are really taking off as well, and of course you've got this long-running seepage of assets towards passive funds. But I think a lot of these really tie in with one particular overarching theme, if you like, again stemming from the regulation, and that's this shift of power along the value chain. So power a little bit away from the asset managers towards the selectors and towards the end consumers, the end investors too. A lot of that, of course, is to do with the removal of commission payments, the ban of commission payments to advisors giving independent advice. They now need persuading in a plethora of ways as to why they should buy a particular product. And of course, at the same time, you're seeing a lot more in terms of pricing transparency, such as the new ex-post cost disclosure charges, which are coming into effect right now as we talk. Those first reports landing on the doormats of investors. That's putting a bit more power into the end investors' hands as well, in terms of what they're paying for their services and for these fund products.
And what are the key themes and areas of innovation for asset managers right now?
So we speak with around about 1,000 fund selectors each year in a rolling interview program that we conduct. And one of the questions we've been asking for about 5 years now is what sort of product innovations are you looking for in the industry? And since we've been doing this research, there's always been one that's been at the very top of their lists, and that's been for uncorrelated alternative assets. So a little bit of a utopia product, if you like. Essentially, you might interpret that as saying, oh, I want something that's constantly providing a return for very little risk. Difficult to provide, but I think there is a serious message in there that a lot of selectors, and reflecting their end investors' concerns too, they want counter-cyclical returns potential that's not really dependent on the traditional bond and equity markets. So difficult to achieve, but we ask the question, and that's the top innovation people come back with. The second one, and this one has really been rising up the rankings in recent years, is ESG. I think 5 years ago when we started, it might have been a top 10 requirement, but certainly in the past 2 years in particular, we've seen that exploding into these innovation demands, and with sales rising as well to match.
So is ESG investing here to stay?
We think so. It's still at a relatively early stage within the retail sphere. I think institutional investors have been much more familiar with ESG for quite some time now. But the past 2 years have definitely seen a spike upwards in net flows into this space. We're seeing a lot more products coming to the market, but you do have to be careful with ESG products that you're not seen to be greenwashing. This is something that a lot of selectors in particular are quite wary of, and they do comment to us that they're not always happy with some of the ESG messages they're seeing. They don't want a Me Too product. They want ESG to really be integrated into the ethos of the firm that's selling the product. But I think we have to bear in mind as well, this isn't a fund industry specific theme. This is something we're seeing across society. And if anything, the asset management is not late to the party, but it's certainly not the first one to join the party. People want to live more sustainable lifestyles in general, and it makes sense that their investments should be more sustainable too.
And what do asset managers need to do better then to build and maintain their relationships with distributors?
A lot of this is about being a trusted partner. So there's a huge amount of talk in the industry at the moment about pricing pressure, cheapness, low-cost funds, and for sure some selectors they're very focused on pure price. But I'd say the majority of selectors are actually focused on the value proposition. What are they getting for their money? And as part of that, they want really top quality service. There are various ways that asset managers can provide this. A lot of it's timeliness. A key word really, especially at the moment, is transparency too. That's actually something a lot of selectors mention as an innovation they want to see within new products hitting the market. They want more transparency. Quite timely when you see the recent news coverage of the Woodford Fund, the H2O Fund, etc., and what's going on in these portfolios. If selectors can understand this, they can communicate that to their end investors. And essentially, it's making their lives easier. That's going to make you a very attractive asset manager for them to work with.
Mark McFee from Global Insights, thank you very much for your time.
Thank you.